Okay, so let's have a look at the last adjustment 9 for McGuigan 2022 manufacturer account and looking at a couple of provisions. So the first provision is investment income due. So I'll do these in two videos, one for investment income due, one for the debenture interest due. So investment income, if they say investment income due, well, first thing we need to do is find out what is the yearly investment. And the second is find out how much is due. So we must have received some of that investment. So we go back to our trial balance, have a look at the investment income. So you can see here is investment income received of 2,800. So we're going to use that in the second part of the working. And we just need to find out what is our yearly investments. So 4% investments of 2,500 acquired in the first to the fourth. So you're going to take the 2,500, you're going to multiply that by 4%. That's going to give you a yearly figure. And because we bought in the first to the fourth, we're going to have the fourth, fifth, sixth, seventh, eighth, ninth, 10th, 11th, 12th. You're going to multiply that by 9/12 to see how much we need to receive for our investments. So 250,000, multiply that by 4%, multiply that by 9/12. So the yearly amount we're supposed to receive is 7,500. So that's going to go to add operating income in our profit and loss account. So if that's the yearly amount we're supposed to receive of 7,500, and we have received from the question 2,800, then the difference between the two is how much your investment income due is. So 4,700. That's going to go into your balance sheet as a current asset. So remember, any income due is an asset, income prepaid is a liability. So that's the adjustment for investment income. So there's no payments or anything as part of this one. So it's going to find out the yearly figure, straightforward, 250,000 from the trial balance, multiply by 4%, multiply by 9/12. Make sure that you look at when we bought it. If this was the 31st of the 4th, you wouldn't use the 4th as a month, you'd be multiplied by 8/12. But because it's the 1st, we're going to use that as a month as well, so it's 9/12. That's going to give you 7,500. That's the yearly investment income. It's going to be added on to operating income. And then we have received some investment income, 2,800. So we're going to take that away from the 7,500, and that's going to give you what's due to go into your balance sheet as a current asset. Remember, this 2,500 is also your financial asset that goes into your balance sheet as well underneath financial assets. So that's how you answer the first part of the provisions recording or calculating the investment income due.